morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at what could happen into equity markets in 2024 after looking at what would have taken place in 2023 with the various equity markets, both locally, regionally, and internationally. And it certainly does make for an interesting year ahead, given some of the drivers that Bourse expects to influence the outcomes of equity markets for investors in the coming months. So let's take a look at what we expect over the next couple of months, and we're going to get straight into it, into the fiscal 2024 stock market forecast as put together by the investment team at Bourse. And in a very brief nutshell, we expect that the Trinidad and Tobago Composite Index is forecast to advance just around 6.4% over that 2024 period after two fairly lackluster periods in 2022 and 2023, respectively, where the composite index would have declined just around 11% and 8.9%, respectively. That performance is going to be composed of a 7% advance in the all TNT index, and that is our locally domiciled companies, as well as a modest 4.2% advance in the cross-listed index, those companies that are based in Jamaica and Barbados, some of those companies that are also listed in Trinidad, on the Trinidad and Tobago Stock Exchange. So overall, a fairly positive, a modestly positive outlook for 2024, which should be some form of recovery after two, again, fairly lackluster years in terms of equity market performance on the Trinidad and Tobago Stock Exchange. Now, some of the drivers that are going to be the foundation for that outlook include continued economic growth, and the IMF, for example, forecasts that economic growth in Trinidad and Tobago for the 2024 period is expected to be around 2.5%, which is broadly consistent with the Ministry of Finance estimates as well. Of course, that is overlaid by fairly subdued energy production, in particular in the natural gas space. The forecast for 2024 to 2026 is some stabilization of natural gas production at around that 2.5 billion standard cubic feet per day level, or BCFD. So that is, of course, going to weigh a little bit on the downside in terms of the outlook. Overall cooling inflation, at least imported inflation, is expected to be broadly positive for the outlook in 2024. Of course, that is going to be overlaid by quite a number of moving parts in terms of cost of living, including increased utility costs, the implementation of, or the looming implementation of the property tax, of course, offset to some degree by increases in minimum wages. So certainly, it's going to be a fairly dynamic environment in terms of inflation and the cost of living. But generally, we see it as being somewhat positive for the outlook for equities in 2024. And of course, at the stock-specific level, well-continued acquisition activity and geographic diversification initiatives by some of those bellwether or industry-leading stocks in or listed on the Trinidad and Tobago Stock Exchange are expected to be broadly positive in terms of the price forecast for 2024. Now, as we get a little bit more into granular detail, we're taking a look at the forecast sector performances, and we're going to look at some of the major sectors. Banking, for example, which accounts for over half of the value of the Trinidad and Tobago Stock Exchange, is expected to perform or advance on average by around 8.2%, and that is going to be driven by varying movements in those constituent members of the banking sector, with the lowest performance expected to be just a 1% advance, and the highest performance expected to be around 17% from year-end 2023 levels. Moving over to conglomerates, which includes the conglomerate sector, which includes Massey, Grace Kennedy, as well as Answer McCall, we expect, again, a roughly 8% increase in terms of stock valuations in that particular sector, with the worst performing or the least performing stock price advance being 5% positive, and the best performing being 13%. The range gets a bit wider as we move across to some of the other major sectors on the Trinidad and Tobago Stock Exchange. Non-banking finance, for example, is forecast for a modest decline of 2%, with the least performing stock, or the stock with the most adverse movement forecast to go down 17%, and the best performing stock in that particular sector, based on Bourse's estimates, to advance around 8%. And manufacturing, 1, 2, and trading, again, fairly diverse variances in terms of price forecasts, with the least performing stock expected to decline to 18%. The best performer in those cumulative sectors expected to advance 15% on average those combined sectors expected to advance just around 4% in terms of overall valuations. And as we drill down a bit further in terms of Bourse's current market ratings, or market ratings rather, we see that in the overweight rating sector, there are overweight ratings on Republic Financial Holdings Limited, NCB Financial Group, Massey, Prestige Holdings Limited, and NGL. Most of the ratings fall into that market weight category, with First Caribbean International, First Citizens Group Financial Holdings, Scotiabank, Grace Kennedy, Answer McCall, Whitco, Agostini, Answer Merchant, Guardian Holdings, and Nell falling into that category, with just two underweights at this point in time, Angletura Holdings Limited and JMMB Group Limited. Now, again, I would like to reiterate that these are forecasts based on currently available information and best estimates, and of course, these ratings are, as usual, updated on a quarterly basis as new information becomes available. Turning very quickly to our 2024 international market drivers, well, economic growth, particularly in the US, is expected to remain positive, but somewhat subdued, with a forecast of just under 2% growth in 2024, based on World Bank projections. Cooling US inflation, again, is expected to help the consumer, and that should be a positive trend into 2024. It should also help in terms of US interest rates peaking and coming down, with the Federal Reserve and other major central banks having to think twice about increasing rates. In fact, that may very well have been off the table already, and it's maybe just a matter of timing with respect to when rates are cut and the magnitude of those cuts. Of course, geopolitical tensions, of which there are quite a few around the world at this particular point in time, any eruption of those particular situations could be negative in terms of denting investor confidence in the short term. With that in mind, after over 24% increase in the S&P 500 in 2023, the forecast or consensus estimates rather for 2024 by Wall Street analysts is for a fairly muted target of 5,000, a target level of the index of 5,000, which represents an increase from the year end of just around 4.8% or thereabouts. So that is somewhat in line with what the performance of the local stock exchange is expected to be. Of course, there is usually a high degree of variance from forecasts relative to consensus estimates at the international level. Now, in terms of equity investment teams for those stock investors at the local level, again, continue to look for value. So maintain that value bias, looking at stocks with very attractive relative valuation multiples, and those include price to earnings ratios, dividend yields, and of course, price to book ratios. Of course, practice some stock selection. As we can see, there is quite a large variance in terms of market ratings by Bourse at this particular point in time. And of course, favor those stocks that do have those attractive characteristics of built-in diversification, benefits by geography, as well as pursuing accretive acquisitions, which help to grow earnings and improve valuations. At the international level, practicing a core satellite strategy is always a good idea in terms of that satellite component. If you're picking in individual stocks, consider industry leaders and or blue chip stocks. Buy quality and not hype. Again, as market sentiment and investor sentiment improves, there will be that tendency or that temptation to invest in some of the latest and greatest and hottest items and futuristic type investments. Of course, some allocation to those sectors or those stocks might be good, but don't put all of your eggs in that particular basket, as they can be quite stellar in terms of results or quite horrendous in terms of results. And of course, practicing that broad market exposure, the core part of the strategy, is always useful, and you can get this exposure through international ETFs, so exchange traded funds, and or international mutual funds. Well, that's it for this week's edition. For more information, you can give us a call at 2-BORSE or 226-8773. Email us at invest@boursefinancial.com. And of course, you can check out our website, where all of our research is absolutely free at bourseinvestment.com, and catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. Stay safe, happy investing, and we'll see you next time on the Bourse Report.